historically speaking, the end of June, the last few days of June tend to be bullish, and then July tends to be a fairly strong month. So really, for the most part, what we're talking about now in the market is that unless something happens that creates a bit bigger of a downward pressure in the markets, we're likely going to get a push higher in the markets back towards all-time highs, or at least 6,100. That would kind of be that kind of the next level of resistance in the markets. But here's what you need to know before the bell this morning. Yesterday, it was interesting because, as I noted, markets were under a bit of pressure early in the morning because of this whole, we bombed Iran, took out the nuclear plants. They were telegraphing a reaction to that, which occurred. Turned out to be pretty much a nothing burger. Market sold off initially during that kind of attack when it was happening, and then rallied into the end of the day, and it was actually up almost 1% by the end of the day. But technically, we were forming this kind of bull flag in the markets. We had this consolidating, kind of slightly downward wedge. Again, this was that kind of correctional point in the market. We were getting a little bit of a pullback here, got down to the 20-day moving average, and then yesterday the market rallied, broke out of that bull flag. So that is bullish from that standpoint. And so we've kind of taken that consolidation, broken out of that this morning. Futures are pointing decently higher. S&P right now is up about 69 bips. The S&P's up about 60. Nasdaq's up about 88 bips. At the moment, because again, we're going to see kind of money flows coming back into the markets today, at least at the open. Now, whether or not we can continue to hold that throughout the day, that's going to be the next question. But this kind of breakout of this little minor consolidation that we've had, and this little bit of a pullback, is certainly bullish at this point. So it certainly suggests, again, after holding support at the 20-day moving average, that's important. Also, we held support at this previous top. So we had this previous top that we had set during that Liberation Day rally. The market had come back down, tested the 200-day moving average. Good, successful retest from a bullish standpoint. We then broke out of that top. So we broke out of that resistance. So we had this breakout. We retested that breakout yesterday as well, bounced right off of that. So again, multiple levels of support here where the market continues to hold its footing. It's still in a very bullish stance as we begin to wrap up the month. And again, historically speaking, the end of June, the last few days of June tend to be bullish, and then July tends to be a fairly strong month. So really, for the most part, what we're talking about now in the market is that unless something happens that creates a bit bigger of a downward pressure in the markets, we're likely going to get a push higher in the markets back towards all-time highs, or at least 6,100. That would kind of be that kind of the next level of resistance in the market. So there's not a tremendous amount of upside, unfortunately, from where we are right now, but things are improving, technically speaking. So there is some upside here. There is still really, on a risk-reward basis, the upside-downside kind of range really doesn't play out well for investors. Again, your downside risk is down to 5,800, which is where the 200-day moving average right now, and you got 100 points of upside, technically speaking. So again, the risk reward's not great here to be super aggressive, but it's also doesn't mean that we can't, go to 6,100, then 62, 63, 64. It just depends on what happens here with the markets. But again, there are some certain things to be paying attention to, right? Economic growth is slowing. We still have a Federal Reserve that's kind of standing pat on not reducing rates at this point. There's certainly some other risks to the markets as we get into into August, September, October, seasonally very weak months of the year. So again, I would still remain cautious here, but if you're looking for some opportunities to add stuff that's been beaten up here lately, might be some opportunities to pick through your portfolio and see kind of maybe some areas you're missing, maybe some opportunities that exist. But just as always the case, move cautiously, move carefully, but the upside to the market is certainly probably the case right now. The market's probably going to try to move higher through the end of the week and into July. That, statistics speaking, doesn't mean it has to happen, but something that usually does. So again, just as an investor, want to try to take advantage of it as best we can. That's what you need to know before the bell this morning.